Welcome back, guys. Today we will be talking about Doordash. Doordash is a recent IPO that IPO'd a couple of days ago. We'll be talking more logistics about the company, what it does, and whether or not I will be buying this stock. So, let's get started. So, as you can see, Doordash just recently IPO'd. It IPO'd on December 9th. I'm making this video 2 days later. The expected IPO price initially was around $75 a share, and then 2 days ago they raised it to $85.95 and eventually IPO'd at $163.81. It did jump to nearly $200 a share, but then right now it has leveled off to around $175 a share. So with the $173.40 share price, its market cap is just around $55 billion, which, in my opinion, is pretty absurd. So, for the people who don't know what DoorDash is the biggest food delivery company in the world. It contributes around half of all food deliveries in the United States, Canada, and Australia. They have a very, very solid management team with years of experience. Mr. Andy Fang has worked with several other companies, made them very, very profitable. And yeah, so now let's compare DoorDash to other food delivery services and why I think this may be one of the most overvalued IPOs that's ever been listed on the NASDAQ. As seen in this chart down below, we can see that DoorDash controls right around half of the total market share in the United States in terms of meal delivery sales. So, second is Uber, third is Grubhub, and Postmates and Amazon Restaurants, KVR Waiter are distant fourth, fifth, and sixth players, respectively. As we can see, there are three main food delivery systems which have around 85% of the total food delivery market share, one being DoorDash, two being Uber Eats, and three being Grubhub. However, this data may be a little bit skewed. For example, Uber Eats on average has 1.3x more spending per meal than DoorDash does. DoorDash's average meal cost is around $12 a meal, while Uber is around $16 to $17, which may make a big difference in the long run. However, both companies are still unprofitable uh, in terms of their food delivery system. However, I believe Uber Eats has better positioned themselves in terms of cash burn rate and total market utilization in comparison to DoorDash. Uber Eats is not even Uber itself is not guided towards food delivery, but rather they're a ride sharing platform and they're mainly into the trucking sector as well. So for them to be more efficient than DoorDash, it does not give me good vibes on whether the company will do well in the future. As we can see by the breakdown, Grubhub and DoorDash control a major portion in major cities. For example, New York City, Grubhub has over half. However, in Miami, Uber Eats controls 61%. So in various cities, various areas have various spending habits. However, New York City and Miami are one of the two most expensive per meal options. So these companies they make more money in populated areas. So if DoorDash controls 70% of maybe, or 60% of Houston or 54% of Dallas, it doesn't mean as much as them controlling 34% of Los Angeles or 33% of Boston because their people spend more money in higher cost of living cities, if you know what I mean. So San Francisco, New York City, Los Angeles, and Miami have the most like they order the most like expensive items, or the items itself are very expensive. So there's some positive signs I see here. San Francisco, 70% DoorDash, which is pretty promising. But if you go to other areas like New York City, 21%, Los Angeles, 34%, Chicago, 37%, it gives more of a distributed scale. So in terms of their revenue numbers and their profitability, their revenue is quite low. I believe it's around $3 billion a year, and they're still not profitable, which the other competitors are not as well. But at least Uber and Grubhub have lowered their cash burn rate, and their total market cap is much, much less comparison to DoorDash. So if we take the two public companies besides DoorDash is Grubhub and Ubereats. So let's compare the market caps and the PE ratios and decide whether the valuation for DoorDash is too extreme for the company. So these are the revenues of the four biggest food delivery companies. We have DoorDash coming in at 1.9 billion USD annually, Grubhub around 1.31, Postmates 1 billion, and Uber Eats 2.51 billion. As I was saying in my previous presentation, that even though that DoorDash has more exposure in terms of percentage deliveries, Uber still outweighs them in total revenue due to the sheer fact that Uber Eats gets a lot more dollars per order than DoorDash or Postmates or Grubhub does. So out of these four, besides DoorDash, there's only one other stock, which is in the public market individually. So Uber, again, is a ride-sharing service, so that's their main premise. While Grubhub is still a public company, and we will go and explore Grubhub and why it is so cheap in comparison to DoorDash. So if you take a look right here at their Grubhub profits, we can see it is steadily rising and they are in the green. As you can see, there was a small dip during the COVID times. However, I expect them to easily reach 1 billion in profit in the coming years. So out of 1.3 billion, around half a billion is profit, which is really, really good news for the company. As we can see in the revenue, this is a perfect chart, exponential growth, which is great for the business. So if we take a deeper look into the stock itself, we can see that Grubhub is valued at an valuation of $6 billion, 6.43 billion. There were talks of it being acquired around 7 to 8 billion. However, those talks did fail. As you can see, it is not close to its all-time high, which is quite interesting, but it did dip below $40 a share during the March COVID crisis. I still think that this stock may be a little bit undervalued in comparison to DoorDash and especially what they can bring to the playing field. Grubhub and DoorDash are both very similar companies. So, in terms of whether I will be buying this stock or not, my answer is no, definitely not. I will not be buying DoorDash unless the price of DoorDash goes below $75 a share. I know it is a stretch, so around $100 below this level, but if we do get a major drop or we do get an IPO bubble, which will pop, I think this company will definitely go down 20 to 30% plus. But in terms of Grubhub, I'm a definite buyer of Grubhub. I do have a stake in Grubhub at around $55 a share. I sold out at 70, so I will be waiting for another dip opportunity. However, I'm not against buying Grubhub at all. I think it's a much better, much friendlier valuation than DoorDash, and I believe that Grubhub will continue to grow and DoorDash will continue to grow as well. But in terms of what has a better value, Grubhub definitely is the leader in that. Thank you for watching. I hope you enjoyed this video. Again, just to reiterate, my top 3 food delivery stocks would be Grubhub number 1, number 2 being Uber, and 3 being DoorDash. So, thank you for watching and have a good day.